We're going to start with that Reddit trade. Mike Santoli has a look at what the squeeze stampede means for the broader markets. Mike.
Yeah, Morgan, it has meant actually plenty for the broader market. The volume and the volatility in just a handful of stocks last week was enough to destabilize portfolios and get alarms being raised in terms of hedge fund risk management models that it did cause selling in unrelated stocks. But the real point here is it's not really a scalable enterprise to go after these very ripe short squeeze candidates. There's about maybe a couple dozen heavily shorted stocks that seem candidates for this. The overall market short interest is, I keep pointing this out, is extremely low by historical standards. We're probably at a 15-year low in terms of the amount of short interest relative to the market cap. So it's not as if this is a heavily shorted market that hedge funds have been pressing their downside bets on. That's one thing to keep in mind. Now, there's still this repositioning trade that's probably still going on with big investors basically just reducing their risk levels all around, going to a neutral corner. So has this purge really worked its way through is the big question. Down 3.3% in the S&P last week. A lot of it had to do with that type of activity. No real way to know if it is done. They don't really ring a bell after that's finished. But I do think you can look to other markets to see if there is evidence of stress spreading outside of equities. But that's not really happening right now. The Treasury bond market has been pretty tame. The yields have held above 1% on the 10-year. Credit spreads have not really been disturbed by all this. So right now it seems like a violent equity repositioning trade that's underway. And, you know, again, it could actually matter if these stocks calm down a little bit, because last week, by some estimates, more than 5% of overall volume was from about a half dozen of these stocks with 50 to 100% daily volatility. That's going to make a dent, even if it's very, very small in terms of market cap compared to the overall market, guys.
Mike, I want to hone in on this quote-unquote silver squeeze that we're seeing right now. I mean, obviously, we saw futures prices jump highest level since, 2013, might even be earlier than that now. But when you talk about the SLV, that silver ETF, and I know this is a point that you've made, unlike maybe some of these standalone stocks, it can much more easily issue new shares. What does that do to the movement, or I guess the volatility that we are seeing or could potentially see in that name? Yeah,
these exchange-traded products are built to be able to flex their share count in response to supply and demand. It's not something that can happen in an instant, but there are these authorized dealers, market makers, who can create or redeem shares in the trust, of course, in exchange for physical silver. So at some point, it's absolutely limited by the ready supply of silver bullion, in the vaults and all the rest of it. But it's not as if, there are people who are short the SLV and they literally only have access to the shares that are already trading out there to cover those shorts. It's a little bit of a different story. Plus, of course, the silver futures market's so much bigger. This is well beyond the scale of just these isolated small to mid-cap stocks that have been run in this fashion. So definitely a test, if in fact it even is mostly kind of an amateur's retail push to get into silver.
Yeah, that's interesting you said that, Mike, because that was my next question, and you sort of presaged it by saying, even if it is. Right. I mean, there is a sense that there are also some large investors involved, perhaps last week with GameStop, and certainly it would seem with this move in silver. I don't know what you're hearing. We can only sort of look at it anecdotally, but it continues to be a theme, at least, or a question, I guess.
Without a doubt. First of all, you can just look at some of the trade sizes I was hearing last week in some of these stocks like GameStop, these call option purchases that are pretty big ticket. Now, look, it could be people who have big profits in this trade that are just kind of doubling down. But I do think that you can basically infer from the fact that any time you get an instrument moving this violently, and any time you get this much public flow into certain areas, the algorithms, the quant traders, they're going to seize upon it, and they're going to try to trade with it or against it. So it's fair to assume that. Plus, when it comes to silver, I mean, this is a market that's always susceptible to sort of, a little bit of hype, a little bit of conspiracist thinking. There's always promoters in silver out there that are saying it's the poor man's gold. There's a shortage globally. I mean, perpetually, that's been the story. So it's not surprising if they would try to bolt on to the social media energy behind this to see if they can amplify that message.
Shepard Smith here. Thanks for watching CNBC on YouTube.